how ZestMoney built a FinOps automation tool, which basically helped it automate the complete money movement process um, between the different entities that were involved in the business. So, although this is a case study in lending and fintech, the underlying principle can be used in any industry where there's any sort of money movement that's involved, right? I'll just explain a little bit about how the Zest business model was structured and the various entities involved so that you can understand the complexity of this problem statement, right? So at Zest, every transaction that a customer did uh, basically involved a merchant. Let's take an example, right? So if Nikhil is buying an iPhone on Amazon over a 6-month EMI, let's say the iPhone costs 1 lakh, right? So basically so Nikhil here is the customer, that is one entity. Amazon is the merchant where the transaction is being done. Zest is basically the platform or the fintech which is providing this service to Nikhil. That is the third entity. And then there is the fourth entity, which is the actual lender or the regulated entity that is providing this loan, right? So there are four entities. Now, this particular transaction basically involves money movement between all of these four entities, right? One caveat here is whatever I'm going to discuss here is pre-DLG, right? Which is anybody in fintech and lending will know. This was before the advent of the digital lending guidelines. So some things have changed post that, mostly in terms of the destinations and the sources from which the money movement happens, but the underlying principle pretty much carries on, right? Now here, the we've already identified the four entities. Now, what are the different money movements that happen here? Now, when Nikhil has done this transaction, basically Amazon has delivered the product. Let's assume transaction is successful. Amazon has delivered the product to Nikhil, right? Now, at the same time, because ZestMoney is the entity through which they made this payment, Zest is now liable to pay this amount to Amazon, right? So there's 1 lakh that I've spent on the iPhone for the 6-month EMI. Zest basically has to settle the amount to Amazon, right? That is one money movement or one leg of the money movement that happens. Zest to Amazon, right? Now Zest itself is not the lender. Zest is the technology platform, right? So the money first has to come from the lender to Zest, and then from there is when Zest can give it further to Amazon, right? So that is your second leg of the money movement, where the money basically comes from lender to Zest. Third leg of the money movement is basically when the customer actually pays back the money, right? So this is a 6-month EMI as we covered. So every month when the customer is basically paying the EMI for that particular month, that first comes to ZestMoney. And since this is basically the lender's money, effectively, Zest needs to then further settle it to the lender, right? So that basically becomes your third and fourth leg, right? Customer paying to Zest, third leg, and the fourth leg being Zest paying it back to the lender. Now, all of this, before we built this FinOps automation system, was handled by a team of a brilliant accounting team, right? Who would manage all of these complexities, ensure that there are no leakages, there are no errors, right? Because even a small error that is made can have an impact of crores, literally, right? So they have to be very diligent in terms of how they calculate all of these amounts, settle them, and then eventually also reconcile them, right? So it was completely managed manually. We realized at some point that this is not going to scale, right? Because at some point we reached a certain scale where this team could not basically manage the sheer amounts that were involved, right? That is the time when we decided to automate this entire process. And at its peak, we were basically using this system to move hundreds of crores every day. Right? Now, the way the system was built is every time a transaction would happen. So let's take the same example where Nikhil has done a transaction on Amazon. Similarly, hundreds of other customers have also done transactions on Amazon, right? And this first leg of the money movement, where Zest needs to pay the money to the merchant, which in this case is Amazon, that typically happens on a T+1 basis, which means all transactions that happen today need to be settled tomorrow, right? Now, in this time frame, Zest also has to get the money from the lender, right? So the first step in this process was identifying all the transactions that are done on Amazon and basically create them into a batch. Now, this batch is what is basically what needs to be settled to Amazon on the next day. Now, let's keep this aside, right? Now, this particular batch again would have loans that are given out by different lenders. So there's 26 different lending partners. So each of these, let's say 100 loans, can belong to any of the 26 lenders, right? So, so what was done at Zest is basically similar to this. The 100 transactions of Amazon, there could be 100 transactions on Make My Trip, 100 transactions on Flipkart. All of these were then identified and segregated into the different lenders that constituted them, right? So the different 100 transactions across the various merchants were then further divided and classified into the different lenders. And each of those was basically created as a batch, right? So lender A, which is one of the 26 lenders, is responsible for, let's say, 50 transactions that again further need to be divided into the various merchants, right? So this 50 transactions was created as a batch, and basically a virtual account was issued against this batch, right? And passed on to the lender. Now, the purpose of this virtual account was batch was already identified, the amount was already known, and the lender was also known, right? And because this virtual account was unique, any payment made into that could be easily traced back to that particular lender itself, right? So thereby eliminating the process of manually reconciling, compiling the UTR, and checking if the transaction has actually happened. So the moment the lender makes the payment of that particular batch, our systems would come to know that, okay, this payment is done. And subsequently, also the UTR number was basically persisted, right? Now, all of this was done using payment APIs. I won't take the name of the vendor that we specifically used for this, but it can be done through any vendor or bank or payment processor or bank that has payment APIs, right? The system of creating these virtual accounts and then consuming those UTR numbers and so on, right? So by creating this virtual account, basically the batch that is created for a particular lender, that money is received, identified, and tagged within the system. Now, before it is settled to the merchant, this batch has to be broken down into the various merchants that are involved in that transaction. Similarly, other batches would have come in from other lenders in the same fashion. And these are then further categorized into the various merchants that are owed the money on the next day, which is T+1, right? And it's further created into a batch and basically settled to the merchant. And because, again, since all of this is done within the system, the UTR numbers are again persisted and shared with the merchant so that they can do their reconciliation and check if all the 100 transactions that are that were liable to be paid are actually received, right? Similarly, this same process in reverse was basically implemented for each of the customer repayments as well, where every customer making the payment again would hit our systems. We would have the UTR number, the payment mode, the date of payment, so on and so forth. This was again aggregated as per each of the lenders that were then liable to be paid, and then that was created as a batch and further passed on to each of these lenders, who would then record these payments within their system, right? So this way, we were able to basically automate this entire process of money movement, which is very complex and involved hundreds of crores of rupees every day, without significantly increasing the manpower of the accounts team, right? So the accounts team practically remained the same size. It's about 15 to 20 people, not more than that. And that same team was able to manage this massive scale as we scaled up our volumes. So yeah, so the same process, although I explained this in a fintech context, can be applied to any industry or any business that involves any sort of money movement, where you have these different entities that you have to settle money between. Yeah, done.